Here's how you can become Malaysia's richest banker. Well, you probably can't, but at least you can know how this guy did it. Teh Hong Piow, he owned and built Public Bank, a 500 billion ringgit giant. It's also the second largest company on Bursa Malaysia, bigger than Maxis, Nestle Malaysia and Genting combined. Or, if you want to look at it another way, 22.6 AirAsias. Born in 1930 Singapore, Teh Hong Piow was born to poor parents. His father had to struggle as a trader and the chef to put food on the table. Then, when he was 6, the dad passed away, leaving 11 children from different mothers behind. Teh was a brilliant student. Unfortunately, his family did not have enough money to send him overseas. So in 1950, at the age of just 20, he started to work at a bank, specifically OCBC Bank. It's a Singaporean bank and his first paycheck was a tiny 130 ringgit per month. But by today's calculation, it's around 2,000 ringgit. Our current minimum wage is only 1,005. It's not that bad, I guess. Now here's the thing. In just 5 years, at the age of 25, 26, he became a star performer and a manager, probably one of the youngest. At that time, one of the wealthiest men in the region, Tan Sri Khoo Teck Puat, decided to recruit him to join his new bank called Malayan Bank or Maybank as you probably know it today. Tan Sri was also at OCBC Bank, but he didn't quite like the situation there and maybe he was trying to poach some of the star performers away. By the way, if you want to know the full juicy story of Tan Sri Khoo Teck Puat, go check out our friends Do It's video on Maybank. Back to the story. Teh Hong Piow was only 34 when he became the youngest general manager at Maybank. Now, I know it sounds young, but when you think about it, by the time he's 34, he already has 14 years of banking experience. However, like many young and ambitious men, he wanted to own his own business, specifically his own bank. So to no one's surprise, by 1966, he managed to obtain a banking license to start his new baby, aka Public Bank. I don't know how many 36-year-olds get to start banks. Do you? The very first branch is located at Jalan Gereja with just 32 staff. Amazingly, just 1 year later in 1967, they managed to list on KLSC for a record, I repeat, a record-breaking paid-up capital of 16 million ringgit. Even our very first Prime Minister, Tunku Abdul Rahman, was there to officiate the opening. Now let's talk Public Bank. Now you might be asking, why did Teh Hong Piow start Public Bank? Here's an important context you need to know at that time. During the 50s and 60s, most banks that existed were only there to serve the rich or foreigners. So Teh just wanted a bank to build a bank that served the common man. Hence the name Public Bank. The first part of the Public Bank growth strategy was very, very simple because there were so many of this sort of ordinary people, ordinary wage workers that were either unbanked or not serviced well. That was their main focus. Unfortunately, many of these people were ignored simply because they didn't have a lot of money like those rich guys, and they're also not foreigners, which people perceive to be richer anyways. So the two groups of people that Public Bank targeted were mainly, as I said, your ordinary wage worker, but also a lot of small businessmen where they had a pretty good business going on, decent cash flow, but somehow the banking system doesn't really want to accept them. But Public Bank saw different, obviously. Now, the next part of the strategy is also very, very simple. To these people who are unbanked or unserviced, they get them to put their money in their banks as deposit. And in return, they will actually offer loans, plain Jane loans, very simple loans like housing for your car and some small-time business loans. Some of the biased or unbiased reasons that these people are not served is due to a lack of societal standing and also lack of education. However, as a business, as a wage earner, they had decent cash flows. Now, what does this mean to Public Bank? It means that they have the capability to service loans, which then means that Public Bank has the ability to be profitable. Basically, Public Bank was banking the unbanked before it was sexy. The third one is again a very simple strategy. They have to make sure that nationwide there are plenty of public bank branches for all these people in the rural areas especially to access. These strategies worked like a miracle. By 1969, their pre-tax profits grew to 1 million ringgit. Mind you, this is in the 60s, up from 71.6 thousand ringgit in 1966. That is nearly a 20x. In the 70s, they grew so fast that they started a new building which only completed in 1978, 4,500 square feet. In 1975, when the Malaysian GDP declined from 8.3% to 0.8%, Public Bank posted a 19% increase in profits. However, the most notable achievement in the 70s came in 1978. It was that year that the Malaysian government allowed banks to freely set their own fixed deposit rates. Now, no, this may be news to you, but back in the day, banks could not do it themselves. The Malaysian government had to do it. Now, at that point in time, many banks would have seen this as an opportunity to lower their fixed deposit rates so that they pay out less, right? Their cost is less. But public banks saw it very, very differently. They decided to become competitive, and the results are pretty astounding. They grew their deposits by 41% versus the industry average of just 24%. Now let's go into the 80s. At this point of time, pre-tax profits grew to 21 million ringgit per year, and assets hit 1 billion ringgit. Now, it is at this point where Teh Hong Piow wanted to transform the bank a little bit into this thing called a financial supermarket. This meant that anyone who got in contact with Public Bank would have an array, a wide selection of financial products, just like a supermarket. The first thing they did was to acquire this company called GP Securities, now called PB Securities. Now, there will be more of such growth acquisitions going on later, but briefly speaking, GP Securities, or now PB Securities, is a stock broking business. In 1985-1986, Malaysia got hit by another recession. However, Public Bank came out stronger, adding 32 branches. As Warren Buffett once said, "Be fearful when others are greedy." You know the rest of the quote. Now, interestingly, that wasn't the best thing to happen to Public Bank in the 80s. Due to a small technical accounting change about par value, Public Bank was able to increase its pay-up capital from 20 million to 210 million, nearly a 10x increase. This allowed the bank to massively expand its ability to give out loans. This will benefit Public Bank for the next 2 decades in a massive way. In 1990, pre-tax profit hit 128 million and assets 10 billion ringgit. This is a 6 to 7x increase from the previous decade. The big theme in the 90s for Public Bank was going regional outside of Malaysia. This would be countries like Vietnam, Hong Kong, Cambodia, Laos, and even Sri Lanka. There will be no rest even for the 60-plus-year-old Teh Hong Piow. The first acquisition overseas was in Hong Kong. JCG Finance kickstarted the whole regional expansion campaign. Now, this investment is very impressive. With just 61 million ringgit investment, Public Finance Limited, which was the renamed version, made 18.2 million in their first year. This is a 30% ROI in the first year. Other countries follow suit. 1993 rolls around and the financial supermarket is in phase 2. Islamic banking and mutual funds will be added to the entire grocery list of Public Bank. 2 of these products will eventually contribute nearly a third of Public Bank's profits. By the end of the decade, Public Bank hit a paid-up capital of 1 billion ringgit. Now, the year 2000, start of the millennium, was super special because they finally hit 1.25 billion ringgit in pre-tax profits. 5 acquisitions was completed in the 2000. By 2007, they beat the 3 billion ringgit pre-tax profit barrier with 100 billion in assets. And by 2008, they were finally crowned the largest bank in Malaysia. How about today? As of 2023, Public Bank has 293 branches, basically adding 5 branches every year since 1966. There are many things that give Public Bank a massive advantage over their competitors. However, I like to highlight these three. The first is that they are cost-focused and very, very efficient. To read out a quote from Teh Hong Piow, now he's a Tan Sri. To me, in banking, conservative means prudent. And it's a big plus to us. Prudent doesn't mean static. A good way to find out whether the bank is good or not is to find out their branch economics. In other words, how good or how efficient are their branches compared to other banks. Now here, we have three ratios that are very important. Number one, net interest income per branch. Number two, loans per branch. And number three, overhead per branch. The first measures the amount of money per branch makes. The next one measures how many dollars are entrusted to them per branch. And the last one measures the cost, roughly, per branch. As you can see here, Public Bank ranks first in both net interest income and loans per branch, and second in cost per branch, losing out only to Hong Leong Bank by just 134,000 ringgit per branch. The second advantage they have is the focus on conservatism, aka being boring with their loans. Compared to many other banks, they like to prioritize vanilla loans like housing and cars, as I said earlier on. This is in contrast to non-interest income, things like fees and commission-based deals that banks always do, which is usually more sexy but also more volatile and uncertain. Now, all of this will translate to them having a very good gross impaired loan ratio, which just tells you how many loans are bad. Of the top three banks in Malaysia, Maybank, CIMB, and Public Bank has the lowest gross impaired loans or GIL at 0.4. Finally, the third reason why I think Public Bank is great, we have to look to Teh Hong Piow himself. He has many of the traditional traits of a successful businessman, setting the right KPIs for his staff, having a positive outlook, and having a lot of grit. But there are two things that I think set him apart. Number one, he does not believe in heavily rewarding his own family members. In fact, they are not even involved in the business. Here's a quote from him. I think the absence of my children or immediate relatives in the bank has been a source of strength to the bank to foster the growth of professionalism and meritocracy. In other words, no nepotism. Second thing, he is very generous. Just to share one story, in 2008, when the world was in chaos, there was recession, people were losing jobs, and some of his staff were struggling financially. He decided to give every staff 2,000 ringgit once off, and also to give them zero interest rates for any loans that are below 100,000. This once-off payment of 2,000 ringgit was worth around 14 million ringgit, and the zero interest rate policy helped his staff save 15 million ringgit a year. You know what else he's quite generous with? Teh Hong Piow has impacted the lives of many. Now, a personal story. I know someone in the bank who has no degree, not highly educated, and he started out as a clerk. Yet today, he retired with a 8-figure stock portfolio that contained one stock, hint, it's Public Bank. And he used a lot of this money to pay for his 3 children's education overseas. And of course, he can retire comfortably. This is one of thousands and thousands of such stories. Now that he is no longer around, rest in peace and long may his legacy continue.